Today's part with the following interruption for a public service announcement.
Welcome to the Investing in Intelligence show, where we talk about artificial intelligence, companies, stocks, and trading. I'm James here with my co-host Kai, and today we'll be talking about Pegasystems, ticker symbol PEGA. I want to remind you that the opinions expressed on the show are just that, opinions. They should not be taken as specific advice to invest in a particular way. So Kai, are you bankrupt yet? Are you broke yet? Are you hanging in there with the ongoing, seems to be flatness of the pullback in AI stocks?
Yeah, we talked about, I made a bad joke about Bloody Marys last week. I apologize to all of our viewers out there. Although last week was a crazy ride, James, but we almost basically finished the week even. I mean, the S&P was just a little bit off from its weekly drop on Monday. And you and I both were talking about Friday in regards to that. And we actually did another show. But one of the many things I wanted to talk about is a few of the companies we're going to be talking about in our upcoming episodes. So yeah, I survived the week. What about you?
Yeah, right now we're in a real tricky place because inflation is pretty much whipped, it looks like, but the market is suspicious of the lingering delayed effects of the Fed rate increases, that being slowdown and recession. So we're in a really tricky spot right now.
Have you been to the grocery store? I mean, have you bought like a ribeye, or have you bought just basically milk or half? And it was the first time in Target. I haven't been to a Target in a while, James. Let me say the clientele at Target is very different from a clientele at Walmart, but I went into a Target just to buy some coffee. I wanted some coffee ingredients, and inflation is whipped. I don't know if I agree with you there. I mean,
well, you're not talking about inflation, you're talking about the price level. So inflation is the percent increase from previous levels on an ongoing basis. It's not the price level. So inflation can be zero and the price level is still way higher than it was like a year ago. Inflation is like, the continuing rise in prices. So there's a difference between disinflation and deflation. Disinflation is the easing of inflation, whereas deflation is the price level actually coming down. We're not going to have deflation. No one thinks that we're going to have the price level come down, except for maybe in some very small areas. But yeah, I mean, so that's more of a voting issue than it is really an ongoing economic issue, the fact that the price level is higher. So I'd say it's more of a political issue than it is really an economic issue. But yeah, people are squeezed, and it's hurting companies like McDonald's and Starbucks. Even Dutch Bros. Dutch Bros was like, people seem to think that people were moving from Starbucks to Dutch Bros, but Dutch Bros disappointed on some of their metrics in their last earnings report, and their stock dropped 20%.
Well,
So
Airbnb is another one. I mean, the consumers' wallets are getting tighter when credit card debt is at an all-time high. I guess my question I'm alluding to with you is, well, what is your idea? What percentage of inflation would you call, is it 3%, 4%? Are you the goal of 2% like the Fed? I mean, I would call inflation whipped when we're back down to 2%, but we're not there yet. That's the point that I'm making.
yeah, when you look at these numbers historically, when you look at the chart over time, the Fed has been happy with the 2.2, a 2.4, a 2.3. Those aren't problematic numbers. And a lot of the metrics show that we're already good where we are. If you take out things like housing, we're pretty much good where we are right now with inflation. Now, year over year comps could be tricky in certain months, but we're pretty much good where we are on inflation. The real concern now is growth. Are we going to start to see GDP come down 6 months from now, and then we're in a recession? By the way, the one thing to remember, and we'll get to PEGA in a second, but just to mention this in closing, one thing to remember is that market sniffs things out long before we get there. So in other words, if you want to wait until we actually see GDP come down to close to zero, you're too late. The market will have already crashed by then.
James is selling all his underlying equities right now as we speak. You hear the clicker in the background to all of our listeners out there. No, I mean, I agree with you on some points, but in the other aspect of this, when the Federal Reserve raises interest rates like it does, usually we expect job loss and some growth issues there. But we have artificially pumped $9 trillion into the economy. And so we have this sort of artificially propped up economy, in my particular opinion right now, James. And so I would say the consumer's getting tight. The ability for overhead and just families or just people across the country, the overhead has increased and therefore quality of life has changed. And maybe consumers are getting for a while, even the last couple quarters, and it's showing. I mean, like you mentioned, McDonald's and Starbucks. Full disclosure, I do have positions in both. Well, actually, just positions. Starbucks. I sold out on my McDonald's position at a 6-7%, which is not great APY gain. Took a short term gain there. That's where we're at. And this is where we're at. However, let me switch it around and say the growth is still continuing in regards to the build out phase of AI. We are still in that phase. And one of the companies we're going to talk about today, I want to see from you and hear from you how they fit in that phase. We are still in a build out phase. So companies that like ASML, TSM, other companies, Amazon, I actually thought or Amazon's earnings were really good, especially their AWS, which you and I have talked about, their AWS. So let's talk about a particular company that I'm curious to hear your opinions on and how they fit in regards to this build out phase that is AI, artificial intelligence. And that company is Pega. So James, answer my question with that. How does Pega fit in? And let me just get that answer right off the bat, and then I'm going to ask you another one.
Yeah, absolutely. So first of all, be careful about telling our audience that you're an investor in Starbucks. We don't want to lose our entire audience. But you also have been an investor in Pegasystems, I believe, which has been a pretty good chart. Like when I look at their two-year chart, sexy chart, higher highs, higher lows. That's pretty much what you need to know for chart analysis.
The higher lows above the 200-day moving average for all of those out there. Just put one indicator on your chart, the 200-day moving average. That'll tell you a little bit about that particular chart. But I do, full disclosure, own a position in Pega. James, do you own a position in Pega?
No, I do not. And I'll answer your question. So I did quite a while ago. I mean, as you know, it was many months ago I started buying AI stocks, at the end of last year. And they had like some kind of disappointing earnings, maybe at the end of last year or early this year. I sold out, and it's one that I missed out on, just like I did ServiceNow. But let me just get into your question. You asked kind of like what do they do? So they do BPM, which is business process management software. And just to throw out a few terms that you might have heard, there's BPM, there's CRM, there's ITSM. So ServiceNow specializes in ITSM, which is IT services management. Another one, Salesforce, specializes in CRM, which is customer relations management software. But Pegasystems is a little more focused on BPM, business process management. And to give you some examples of what that is, because I think it's important to know kind of like what your company actually does if you own it. So to give you a few examples, order processing in retail, claims processing in insurance, loan approval in banking, employee onboarding in human resources, compliance management, finance, marketing campaign management, supply chain management, and healthcare patient management. So for healthcare, to break it down, supposedly some of the BPM type of things are like automating patient records, appointment scheduling, treatment plans. So things like that to reduce administrative burden. That's what their software does. Now, the cool thing about their software that I like is that it's allowing the frontline employees to do the automation and customize their workflow. So let's say you're like a doctor, and you have Pegasystems somehow integrated into your outpatient clinic software. Well, you could actually customize the workflow, customize automation so that it serves you best. Even though you're just like a doctor, you're a frontline person, you can do that according to the company. I haven't used their software, but this is according to the company. But it sounds like a cool thing to me. And apparently the BPM and CRM markets are growing at about 10% annually, and they're expected to continue to grow. So it's not a bad market to be in, I would say.
Yeah, it's great. So I think that's a pretty good rundown for our listeners in general, what Pega has to offer. A little boring. How does that play out in regards to the build out phase of AI?
Yeah, that's a great question. This isn't real. Well, okay, depends on what you're talking about with build out. So eventually the build out needs to move into software. Eventually it needs to move into end users using AI. We know that ChatGPT has a massive subscriber base, enormous subscriber base, but it needs to move more into businesses with time. ServiceNow and Palantir are probably your biggest purist AI plays that are doing that. They're helping businesses and even government use AI, generative AI, and actually Pegasystems was working with the U.S. government also and integrating some of their systems into U.S. government. They say that in the last 5 years, the U.S. government has been more keen on using this. Now the build out. Well, we need the build out to move into software and specifically B2B, business to business software. So I think Pega actually does that.
Yeah, absolutely. So give me an idea of the company in regards to its financial health. What is it looking like financially? Um, Basically, when we were going through our portfolio, you should check out our website that James and I have come up with. When we were going through this portfolio about particular companies, I went and looked at the financials. You didn't like what they had to say on their earnings call, not for this most recent quarter, but the quarter before that. I stayed with it. And so James doesn't own a position. I do, but give an idea of what made you exit that position. What do the financials look like in regards to the company's macro financial health, and give a picture to our listeners for
Yeah.
that.
I think it might have been a couple quarters ago that I didn't like something in the report. And I also just look at the reaction, the market reaction. So what was the whisper number? Like might not even have been their estimate or the market estimate. It might have been the whisper number that they didn't meet. But that was a couple quarters ago. So where they are now, I mean, their operating margins are 18%. With a software company, you really want the highest margins possible. So where are they? Well, okay, so they're predicted to have a 5% compound annual growth rate. I would like to see a higher growth rate. I'd like to see maybe a 10% annual growth rate because with every dollar I have, I want to put it in the fastest growing company possible. I don't know. So let me just answer your question in this way. There are some things that concern me about its financial situation and where it sits. So they just became profitable in 2023, but they've been around since 1983. So they just did this big shift to the cloud that kind of challenged their profitability for a bit. But yeah, so profitable in 2023, been around since 1983 and just recently moved to the cloud. They do have competition in Microsoft, Salesforce, Oracle, ServiceNow, Atlassian, Appian. Appian sued them for $2 billion for some kind of infringement of their IP or something. And they lost the suit initially and then it got overturned. So I will say their PE is attractive, like a forward PE. I see a forward PE of 20 for the average estimate for next year. And then I see a forward PE as low as 17 for the high estimate. And for a software company, that's a pretty low PE, like for a software company. But I will say their margins aren't quite where I would like their margins to be. And just to kind of flesh that out a little bit better, I'm going to show you on ChatGPT what it says margins should be for like software companies. Should be 20 or 30% for like a good company, but 10 to 20% for average, and then less than 10% would be bad.
What I kind of found is too is that some of those margins are improving. And so we have seen improvement. And like you said, the company has become profitable and turned profitable, especially, I mean, I think this last year, 2023, or the last 12 months is an EPS of around 0.84. So the company has consistent revenue growth. It may not be the growth that you want to see, particularly in regards to other companies, but does have consistent growth, including net income that has increased. So the company's become profitable with revenue growth. When I was looking at the company back when you and I were targeting it through 2 or 3 quarters ago, looking at this company, I did like some of the macro in regards to their assets, their liability, their EPS, and the role that they play even in the in-game narrative that is AI. So for me particularly, please don't take anything as investing advice, but for me, my particular decision is to keep this as potentially part of my diversification in a smaller percentage of my portfolio. And that was my strategy, 3 quarters a year ago. But yeah, go ahead and go into some of the things that concern you, some of the negatives there, James.
Yeah, absolutely. And so basically, what it comes down to is the probably the most concerning thing for me that I'm going to show on the screen here is that their CEO, who is also the founder, who's been with them since that 1983 founding, he owns about half of the shares of the company. So let me just show kind of what I'm talking about here and give an example of what I'm talking about. So let's compare three different companies and let's compare their insider ownership, and also we can look at their ownership by institutions. So Nvidia, 4% is held by insiders. That's actually kind of highish compared to older companies. Like Microsoft is pretty much 0% held by insiders. For Nvidia, we've got 67% held by institutions. Tesla, we have 12, almost 13% held by insiders, and 46% held by institutions. Pegasystems, here's where it gets a little bit crazy. 47.5% held by insiders and 50% held by institutions. So what is it, like 2 or 3% is held by retail investors, or people who are not an institution or insider? I mean, that's insane. Like I've almost never seen anything like that before. That's a concern for me because if the CEO owns half of shares and he's like 65 or something like that, let's say he needs to retire, let's say he wants to do some legacy planning or whatever, estate planning. Let's say he starts to sell. That's a concern. So that's one of my concerns. The $2 billion could actually hurt them. So they lost that case, then they had it overturned, and now apparently Appian is refiling the case. So they could still lose that $2 billion. It's not a huge company, it doesn't have a huge market cap. So that would be a pretty big hit to them. And the other thing I'll just say is like small cap software stocks. I mean, you got to really know your SaaS stuff to be a competent investor in small cap software stocks. And to give you two examples that have hurt both of us, Nice and Frog. So Nice is a company that I owned. Amazing earnings growth, beating expectations, just everything seemed to line up perfectly. But investors seem to either hate it or just not know about it. Like there were so few analysts that cover it, and it sold down really bad on an earnings report that I thought was great, but nobody knows about it. It's like a small software company that's doing a little bit of AI adjacent stuff. Same with Frog, JFrog. We covered JFrog. We did a video on JFrog. Well, JFrog also has had great growth, beating numbers, seems good, but it's sold down. It was all over CNBC. It sold down, I want to say around 20% on their last earnings report. I don't even know why, because I don't own it anymore, but I believe you did own it. So what I would say is you can clarify further on that if you want to, but what I would say is that these small software companies can be relatively dangerous in the face of the change that AI is bringing. So maybe you don't want to just go all in on one of these small software companies. Maybe you want to hold a small basket of like a basket of small amounts of more than one of them. That's what I say. They diversify, have like a basket of them rather than like just going all in on one of them. That can be extremely dangerous.
Yeah. So, I mean, the software sector has been a damaged sector. So, I don't put all the stock in it. I have been focusing on, I think the large portion of our portfolio that you would agree on, for me particularly, that I'm focusing on is the build out phase of AI. And to circle all the way back, economically speaking, the companies that have shown really good growth are players in that build out phase. Now it's the end narrative that you and I still really believe in, that basically AI will become profitable in the future. And so there are certain companies that I want to, it's not bet on, but invest in depending on their financials and numbers. In particular regarding JFrog, yes, I do have a position in JFrog. I have not sold out of my position. I went through their earnings call, and one of the things that JFrog I looked at was return customers. So PEGA, do you know any of the numbers? That was something I did not look up or did not research in regards to their customer base and how are they having return customers? Yeah.
Excellent question. Yeah, they've got good retention of customers, but guess who showed up on their earnings call asking a question? Dan Ives, the legendary Dan Ives. He's the most famous tech financial analyst in the world, and he's known for wearing bright, colorful colors. If you heard his name and didn't know who he was, that's who he is. But he's pretty much the most synonymous person on Wall Street because tech is the most synonymous sector on Wall Street. Anyways, so I've never heard him on I've never heard him on a call before. I was shocked to hear him show up asking a question on the Pegasystems. Pega's a small company. There were 7 people who listened to the earnings call on YouTube. 7 people. So Dan Ives somehow showed up asking a question on their earnings call, and his question was, so these customers that you're showing, are these new customers or are they existing customers? And the CEO pretty much responded, they're existing customers. And Dan Ives was like, well, is AI helping you add new customers? And the CEO kind of didn't directly answer it. So I'm not super bullish on that aspect. I feel like maybe they're upselling existing customers more than they are adding new customers. So I would say like there's just, and I really want to have a stock that's in this business process management sector. I really want to have that diversification, but I'm a little concerned to jump in here just based on how software is kind of, taking it on the chin.
And that may be something to look at from a sector standpoint. I mean, typically you want to swim with the current as opposed to against the current. And so software as a sector, you may just wait till the whole sector turns around and then you can go ahead and shift, particularly when you're looking at stocks, for example, one like Pega, one like Palantir, one like ServiceNow. When the whole sector is a pretty damaged sector, that may be a more risky underlying asset to purchase and go long on when the whole sector is suffering. So to give you an example, Chipotle in regards to the service industry, restaurant industry, Chipotle was basically the shining star in a sea of duds, right? And then Chipotle finally took a big hit, there. So one strategy I particularly recommend is find the sector that's working for you. A good way to do that is kind of sift through the ETFs and then go ahead and swim upstream or swim downstream as opposed to upstream. So James, my biggest negative on Pega is something, probably a concern I have is the same concern you have, but although my biggest negative when I was doing some of the research on this is just revenue growth in regards to percent revenue growth. So like you have said repeatedly over time, eventually I will add the word eventually, numbers lead to appropriate evaluations. And so market sentiment can change that, but ultimately the stock market should value it appropriately. It is a market. And it rewards the growth. So it doesn't have the growth that I would like to see. That's the biggest negative that I have, but it does have consistent revenue increase as well as net incomes. So I find those as positives.
Well, let's do our short takes here. By the way, our short videos have been pretty popular. I think we had a 30,000 view video on TikTok, but that was actually our stock market crash short take. But our
Get
short
us over
takes on the specific
for our
stocks.
short takes, guys. James, give your best short take with the goal of hitting over 30,000 for Pega.
Yeah, well, with 7 views on their conference call, I don't know if we can get to 30,000 on our short take on Pega. If 7 people want to hear Dan Ives' take on it, I don't know if we'll get to 30,000.
BPM software, y'all. It's a hotter hit than the Taylor Swift album. So yeah, give me your short take, James. What do you say?
All right, so I am not buying Pegasystems since the CEO owns half of the shares. It's not at all a recession-proof business, and I've been burned on other small-cap software stocks. I'd buy it on a pullback, though.
Yeah, so I'm a buyer of Pegasus currently at the current valuation, as well as it's shown consistent revenue growth and net income numbers. So currently, I'm a buyer of Pegasus. Would also like to point out that would be my quick
do that over
there.
and do that over and say Pegasystems instead of Pegasus, since it's Pegasystems and not Pegasus.
Yeah, so I am a buyer currently of the underlying Pega due to its consistent revenue growth as well as net income improvement. So I am a current buyer. I will also add that I'm a current buyer at the price point. So the one thing I like about Pega is its technical analysis. It's above both its 200-day, 50-day, and if you'll see, its 21-day moving average is still above its 50-day. So you mentioned to me off camera during this episode that you're a buyer on a pullback. Is now not the pullback you've been waiting for
That's
Pega.
so tricky. I mean, it's like it's the incremental dollar. So yes, now is a pullback, you're right, but it's the incremental dollar. Like, would I rather put it in Pega with a 5% annual growth rate, or would I rather put it in something with a much higher growth rate, like ARM or Palantir or ASML, or so many of these other companies have a such a higher growth rate than Pegasystems. So Pegasystems it has to be part. If you want to own software, especially AI adjacent software, it's like it has to be a part of your portfolio, along with ServiceNow and Palantir. But ServiceNow and Palantir are safer to me, so I would rather jump back into ServiceNow than Pega. That's just kind of my take on it now.
Awesome. Well, you heard the 30,000 take for James soon to jump off the train tracks and fly into the stratosphere on TikTok until it's banned. So, and James was an advocate of banning TikTok. Let the record show. James said, "Let's ban TikTok."
Yeah, now we've got the most followers on TikTok. We've got almost 500 followers on TikTok. So the question is, am I a bandwagon ban advocate, or what do I do now? Like, do I like TikTok now?
James is going to change his mind because now that is our most popular social media platform. Please give us some Instagram likes out there, guys. Share our episodes to your story so that we can be popular on Instagram and not only TikTok, so that when it's banned, James won't have to eat his words. So
awesome. All right.
I'm going to blame you when it's banned, James, particularly blaming you.
You can do that. Thanks for tuning into our show. Please give us a like or comment. We'll be back in the next episode to cover more AI stocks. You can find all our holdings and trades at investingintel.ai. Thanks so much, Kai.
Thanks, James. Till the next time.
The first revolution is when you change your mind about how you look at things and see that there might be another way to look at it that you have not been shown. You will not be able to stay home. You will not be able to plug in, turn on, and pop out. Revolution will not be televised, and be no rerun, brothers and sisters. The revolution will be live.